I want to start with you. You ready? Maybe he's not here. Okay, man. All right, Ryan.
Yes, mate, I'm here.
All right. Uh, well, U.S. dollar yen. I
Creeping
mean,
up, innit?
flat, huh?
Creeping up.
Yeah. I know that what 150 is your line in the sand. We start closing above it.
Yeah, there's going
Uh,
to be a few big lines in the sand up there.
yeah. Decent action in the commodity currencies. I mean, I still think there's a shot we challenge is slow in Aussie. Um, Even though the metals are up, what happened last week changed my view. Short term, not
Yeah.
intermediate term. Kind of knew it. When was it? It was Thursday. That when the dollar really had, a sell off from this 78.6 level, the metals could barely recover and still finish lower. So I know we're having a bounce here, but to me, it looks like silver now. Um, doesn't change my long-term holdings. I'm still holding the miners in silver. In fact, they almost look like two different markets, but just sticking with silver for now. Sure looks like they should be able to gun for these stops under here and have a third drive down here and clean out the long. So this was the first drive, second drive, and one more. And, similar story for gold. It's hanging on by a thread. I guess you could say high or low. It almost looks more positive than silver because of this.
Yeah, well,
This
that 1640 level's shown up again. For me, it needed to break that. We've been talking about this 1675, 85 zone.
Yeah, right
Uh,
here.
yeah, then there was a minor level around 60, and it really needed to sort of clear that and sort of 54, 55. We got that. It
Yeah,
pushed down to that 40 level, which you can see going
yeah,
back to September. That was an area. So can it? And
right
it's
here.
give or take, it's held there. So we're not going to get a push down to the lows unless we get under that sort of 16, 40, 41 area.
Okay. Well, that'd be fine with me. I don't think we get any kind of important turn in the metals till we get a turn in the yen. And the yen's rallying, and 10 years are down pretty good today.
Yeah, a bit of a detachment at the moment,
Yeah,
isn't it? The
yeah,
dollar, cables up, euros up. Like you said, Aussie's sort of up a little bit, but dollar yen is out on its own again, and that's put it firmly into the intervention territory again. We've had comments out overnight from pretty much everyone. We've had the wording speculative coming in,
okay.
but it's more we're watching for speculative moves, not we are getting speculative moves. That
Oh,
once we get we're getting speculative moves, then we're banging intervention.
I wonder if they'll have cooperation this time, or
Well,
they'll have to go solo again.
it looks like they're going solo. I mean, we heard from the Fed. I think it was Kashkari who stuck two fingers up last week, saying that dollar strength is a concern for other countries, but the Fed's there to do their policy for the US, and
Yeah,
it got brushed up.
every central bank for himself
Everyone
nowadays.
for themselves, yeah.
Okay.
As we have a saying here: all for one and fuck the rest.
Yeah, yeah.
So yeah, I don't think there's going to be there won't be coordinated intervention, but it looks like if Japan intervenes for the reasons they've explained at the G7, G20, G whatever, they'll
Yeah.
get the green light to be able to do it, sort of thing.
So also, Thursday, I think the low here is important, and I think it's going to hold. And despite what's going on in the end, I think there's a chance that this 78.6 level up here, this was the CPI, and looks like it could challenge it, but right now I'm going to go with it and think that it's going to hold. And I think the S&P low is going to hold too. In fact, with as ugly as it looked last week, it's still closing over the 3,600 level. So 38
Yeah.
is key. 38 is key for continuation.
Yeah, the question remains, what will it take to make the dollar more bullish than it already is? I mean, take dollar yen out of the equation because, as I say, it's a bit out on its own. But what's it going to take for the dollar to be more bullish, particularly on the Fed? It's not going to be a larger recession.
Right.
We're in that territory now. Will the Fed go even higher, or is the economy going to tank to force their hand to stop hiking?
Yeah, you're right. The yen is the outlier. I also am not used to pound being the leader in a move against the dollar, but things always change, right? I mean,
Yeah,
I would think it would be euro, but it's not. I mean, e.g., I keep looking at it for a reason to, be bullish euro over pound, and I can't find it yet on e.g.
yeah.
I don't
It
know.
really is a
Did you
mess.
have a feel for a low coming in here, possibly? I mean, it's
Well,
been one heck of a move from 92 to 86 in less than a month.
Well, you pretty much got to take all that period, sort of from when that mini budget stuff was announced to now, as a one-off event.
Aberration.
Noise. Yeah. It's like I said today. We've had all this mini budgets. They basically, if you don't know, they've reversed pretty much all the mini budget this morning.
Okay.
But all this is just short-term noise. It doesn't change the fundamentals. The fundamentals are inflation is still at 10%. The Bank of England is still hiking, and like every other country with high rates and high inflation, we're heading towards a recession. So the fundamental picture doesn't change. So really, is the Bank of England going to hike harder than expected? Well, Bailey said at the weekend he expects to maybe hike more than expected because the inflation hasn't done what they thought it would do. So we're still going to get high hikes from the BOE, but balance that off against what the ECB is doing. It's pretty neck and neck. They're probably going to go for a 75. Bank of England's going to be 75 or 100. So it's pretty tied in the divergence trade between those two. And we've still got the same old crap hanging around our necks to do with the Ukraine and everything else going on. So for me, Euro sterling still would be undecided. The picture needs to be clear. I still fancy it from the long side because I think the ECB are going to be forced to hike higher than expected.
Well, I mean, it was orderly, right? I mean, it held the low the move that we had the week before, and everything else got hammered, and like the metals did, and the euro held up pretty well, even during the risk off on Friday. So.
I mean, you go to
I guess you could be long and risk the lows at 78.6 here. But maybe it gets a little deeper here. I don't know. I just was looking at the Aussie, and commodity currencies have been weaker than cable and euro up until, I don't know, maybe today. And I just don't trust. I don't trust this little bounce here. These candles. To me, just, do not, and it's the same in gold and silver, after getting smashed or just little recovery candles. I don't like that kind of action, although, market doesn't care what I like. But I would like one more flush in Aussie down around 61.10 or 20 down here to try it. Okay. And that would give me a completion of this pattern. If that happens this week, I'm going to go for it.
Yeah. Well, I mean, you look at the weekly for something like Aussie dollar, it's been caned, for months. So, what do you look for when you're trying to find a bottom? What do you look for? You look for at least a point in time that lasts for longer than 5 minutes, maybe 2, 3, 4, 5 days, where it can't make a new low. And if it can't make a new low, because all you've got there is weekly lows, weekly lows, weekly lows.
Yeah.
When it can't make a new low, that's when you start to think, okay, we've got the potential for a bottom.
Right.
And then that's when you start to think, okay, maybe we might start turning. Doesn't mean we're going to rally 8,000 pips, but all moves start somewhere, and the price action will be clear enough to tell you.
And, while the Aussie was extremely weak and RSI confirming lows, Canada on the CPI did not take out these highs from earlier in the week. So I think we're very close in the, this is a pretty good picture. Look at new highs, how it's glaring up here. And we talked about it last week, right? Before I think it did this candle. This was news, right? I
Yeah.
think it was the PPI or CPI. It was one of those days. So yeah, it was Thursday, another big Thursday candle. So, and crude, supported that move back up. But I look at WTI here and it looks pretty orderly, this decline right here
Yeah.
after this break. And I know Greg had a wedge that we broke out of. And I think that we're not going to make new lows in crude, that this is probably a break to buy. And that would support trying to top pick USD CAD too.
Yeah.
So I have some ideas, just I don't feel compelled to do anything here right now. Do you?
Yeah. No, I'm the same. I'm exactly the same. I mean, we got a bit of a detachment between oil and CAD. I mean, like you said, dollar CAD ran to that highs. And look, we saw WTI back 75s and dollar CAD still went higher. So, it's the old correlations come and go, what's strong, what's not. It's all a dollar picture at the moment.
I think the longer that the dollar takes to, try and take out these highs and this 12.5 level, I remember we were here and on Thursday, and I said, we're going to sell the dollar. And it was a great day trade. Bothered me the way the next day it gave so much of it, recovered so much. But under these lows, like 112, 111, 110 should be next. So I think it's probably even worth having a, what do we call this? A pivot. That looks like a pretty good pivot line to. Oh, and here's one of the best national parks to visit while you're waiting for it to. While you're waiting for Canada to break down, you could have some nice scenery.
Super trader and tour guide. There you go, Dale Pinkert.
Yeah. Anyway, I think this is pretty important. I've been reading about puts and everything, and we all know that there's a lot of bears, and I'm sure the bears thought they had it after, that this again was going to be a one-day wonder, like this was just a two-day wonder. I think that look at that glaring divergence. I think this is going to hold at least for a few weeks, and they're going to squeeze some shorts for a while. And I think that would happen with a weak dollar, at least not a real strong dollar backdrop.
Yeah.
That's my thought. Stel, you're right to wait on the metals.
Yeah.
And do you have some downside targets? Do you agree with me that silver might make new lows here and take out this level, and then maybe do something? Do you have to clean out longs one more time? Or are we going to hold here?
The price action. Okay, today we're up, but overall the price action is not encouraging. Let's say if you're bullish.
Such an ugly weekly candle.
Yeah, so I'm waiting, and I do think there is a very good chance that we're going to test those lows again. And if they go, it's probably the last flush, as far as I'm concerned. And this will, if this happens, it will coincide with more risk off, more dollar rallying, yields going higher. So I think metals are at the mercy of really of yields. I mean, that's what I think was driving everything. And I've said it. Remember, a couple of years ago, probably before COVID, we were saying, what's going to be the catalyst when things were really rallying and equities were going grinding higher day after day after day. Remember, we had the trade talks between Trump and the China and all that, and everything was going up. And you said, what's going to drive the next move lower? And I remember saying, I think it's going to be yields. Now, how do yields go higher? It's a different question. We had COVID, we had Ukraine, we had a lot of things, but I think yields are still driving everything. So as long as they keep going, and as long as central banks are hawkish, and the Fed is expected to do another 75 next week, and and they keep going. So as long as that happens, unfortunately, metals are going to be under pressure. It is a little bit perverse because we have inflation, and that's why the central banks are hiking. So when you have inflation, the price of goods and services go up, the price of products go up. When something has supply and demand pretty much in equilibrium, if anything, silver has a lot higher demand now than it had before. For physical silver, and all the new technologies are going to be using more and more of that. War machines use silver. It's used everywhere. And perversely, inflation is taking everything higher except silver. So, it has huge amounts of catching up to do. But the question always is, what entry level can you get? What's the best entry you can get? Because, this thing could be in your face 20, 30%. So you have to be able to either weather the storm, which means no leverage or very low leverage, or try to catch it. Try to catch as best as you can.
One thing
and supply is not so much. I don't know where you get that from. Anyway, let's carry on.
Supply?
What were you going to say? Somebody wrote supply is so much. I'd like to see data of that.
I saw a video yesterday from a veteran in the physical space, and you can't. They're sold out.
Yep, I tried to get some.
Have you tried? I did about a month ago. Pick up some more, but and the spreads weren't bad. They were Indian head silver rounds. I figured go with the coins and the country of your origin. In case you ever need to really use them. But I hear that there's no silver. I actually have James Henry Anderson, who works for a physical broker, on tomorrow. I'll ask him about supply. And you know what I want to know? Where's the selling coming from? I saw an article that Putin is in some African country that's a gold producer. And, he supports the government that's in control. And they're just, all the gold is going to Russia. Maybe he's in there selling gold.
Yeah, who knows?
Who knows?
Yeah.
Anyway, I wanted to, and then I want to bring Blake and whoever's here. This is what gives me hope in silver, is that when you look at that silver chart, let's go to a daily. Okay, and then you look at something like this, and these are juniors. Okay, so even if silver made a new low, I don't think these will. This is not a junior anymore. I don't think it will. Some of these, I think that, we may get close to the lows, but the shares they feel like they're under accumulation. There are two different charts when you look at the shares and then you look at the bullion.
Yeah.
And so anyway,
yeah,
I was taught they're supposed to lead. That would be a tell if silver washes out under those lows, and some of these shares are not making new lows with them. So that's something that I'm holding on to as a sliver of hope. So bring Blake in, and good morning, Blake. How are you, buddy?
Hey, good morning. Happy Monday to everybody.
Yeah. So any conviction about stuff here this morning?
Well, we've seen a bounce, obviously, in risk. As I was, just mentioned in the tweet that I sent out this morning. We've got some pretty important earnings this week.
Yeah.
And so, that's like got to be the focus, right?
Right.
Hold on one second.
Since yields aren't today, it's going to shift to. If yields aren't making new high after new high after new high, it's going to be all about earnings instead of
the dollar. And I think we got to focus on the really 3,600 level in the S&P. We are seeing the dollar show a little bit of a weakness against some currencies, not the yen, but the dollar yen is almost at 149.
You want to grab the charts, and I know you had a nice wedge formation in US dollar yen, and we're not quite there yet, right?
Hold on, let me grab that really quick. You know, some of the earnings, and I was just pulling up today. You know, we've got you know, Bank of America that's pre-market today. You know, we got Netflix later today. What else do we have that's really
some
big?
of the banks did well Friday in a red tape. I think JP Morgan.
Yeah, and that's
yeah.
one of the things that, you know, I think a lot of people have been noticing is that earnings haven't been like extremely horrible yet. I mean, it's early. It's really the next couple of weeks that are going to be big. But
well, yeah, sure. Trader Summits within the next couple of weeks, so you know it's going to be. Weekend. You know, yeah. So you know that was a great call. Things, you know, there's some big things happening.
Yeah, and by the way, if you guys have not had an opportunity to sign up for the event, I'm going to go ahead and make sure I put the link in here. You guys should get signed up because it is, or Stelios, do you mind throwing that in there? Are we
sold out? Sold out, I thought.
We are, actually,
I'll put the link in.
Out.
It is free. It is free. You have to remember that, everybody.
And it is free,
isn't it?
I thought we actually sold out.
All sold out. They're scalping tickets now.
It is free to register. But what we do have a problem with is limited registration or enough people being able to get in. Most people should be able to listen live. But the good news is, even if you're traveling or whatever, you'll get the recordings first. So make sure you guys do register. It's going to be a really, really great event, you guys. First of all, if you register, two lucky winners will get iPhone 14s, and then 2 other lucky winners, which could be the same 2 people, are getting $250,000 trader funding assessments. So we're giving 2 of those away. So it's going to be a pretty spectacular event. And then on top of it, look at all these great speakers that are going to be here. So make sure you guys get involved, get registered, no matter if you can't be there live. So I want to talk a little bit about, you know, you can see the euro. It's not making new lows. That's the thing I want to point out about the euro dollar. The sterling also holding like a 50% retracement. We have a bull flag pattern. It's developing. If you were around on Friday, you knew that. The Aussie looks a lot better here, not making new lows. You know, the one thing that is happening is you got the dollar yen that continues to, you know, push up against that wedge, which Dale was just mentioning. Matter of fact, have you guys heard from K-Man this morning? Is he here?
I'm here. Hey, everybody.
Oh, good morning, K-Man. I'm not sure if you had an opportunity to say anything, but here we are with the dollar yen at 30, I think 32-year high since 1990. Yeah. I mean, what do you make of this? And are we at intervention risk right now?
Well, I think we're at intervention risk all the time, especially if yen weakens on its own. And I've also noticed that crude and some of the energy stuff is starting to find perhaps a few tops and coming back down, and it doesn't have an effect at all on the yen because of the Bank of Japan continuing to push for the easing monetary policy. And I think the market says, like, if I can't buy too many of the other dollars, so I'm going to buy dollar yen again. And yeah, I've had this in the really short term, or like the 140, 145, somewhere triangle. And if you take that width, which is about 5 big figures or so, and you add it onto it, there might be a possible target just above 150. And we also heard that there's a few decent, which is logic. It's just a big number. A few decent option barriers around there or expiry. So things point now to 150, and we'll see what happens there. And there's going to be a lot of talks and a lot of questions about whether they are going to really intervene for real up there. But I think it'll depend on what the yen does versus other currencies, because I left early last week at around 145, and here we are close to 149. Okay, it's in 4 sessions or 5 sessions, the ramp higher, but still it's nearly 400 points. So it must raise some sort of alarm bells in Tokyo.
Yeah, I mean, you'd think it would be. And you're right. You know, we're near the 150 level. I know the top of the wedge is right where we're at. I mean, it's maybe a little bit higher than this. The 161% extension of the intervention efforts was our initial target. If you're following along with ForexAnalytix, that's just levels that we've been discussing as of recently. The one thing I want you guys to also note is, I'm going to take you over to the pound yen, and I'm going to take you to, let's go over to, I think IDC gives a lot of data. Let's go over to the weekly chart here, and let me just show you guys something. So if you take the highs here from 2015 to the lows, you'll notice this is a weekly 618 retracement as well. What's most important about that is we've had multiple tops there. So you got the sterling, which might actually be creating a major low, because and I talked about this during the week ahead video. Had a conversation with Mark Chandler, which, by the way, if you guys want to see that interview, go to this interview right here. It's right at the front of tradersummit.net. It says, buy the rumor, sell the news following CPI. He talked about, major bottom in the dollar yen, because in the sterling, because that move in the sterling happened during Asian hours, which I'd agree. When things get pushed, and we call it the dead zone, between the US and Asia, when you see moves like that happen, that really, that tends to be, well, there are levels that I don't tend to put too much emphasis on. So we were hitting all-time lows in the pound dollar at that point in time. So do you guys put any emphasis on that? Ask Ryan, K-Man. You guys think about that, just being in the UK?
Well, I'm keeping an eye on the sterling yen, and I've seen those those tops as well. But I think a lot has to do with you've got the sterling on one hand who got hammered, and now the market is trying to buy it back because Hunt is scaling back on whatever Kwarteng had put in place. And then on the other side, you got the yen still behaving poorly. But is the sterling yen a driver for anything else? I wouldn't say so personally.
I'm just saying, with those lows that were created down here at the 103.50, I'm kind of arguing that the bottom's in.
Oh yeah, I mean, around there, that's very possible. And this where it stopped somewhere in the middle of last week around this 109.30, 25.30. It's pretty important down there as well. And I've been highlighting this level before. So after we have done the low. And then I think Greg also had some wave count down there, and as a matter of fact, it held. So I think 109.25.35 on the cable is going to be mega important now.
Yeah, I agree with that. But because I think the sterling actually hit a low and the dollar yen could punch past 150, you got to be watching the pound yen. The pound yen might be able to take out those tops. There's multiple highs up there, and I think again, here's the pound yen. You take a look at these highs right through here. We scream past this like 169 level. We could make a quick move.
So is Guppy a better one for intervention fade than others?
What's that?
Would the Guppy be a better intervention fade than the others?
It might be. It might be. I mean, and I think this is going to be a very pivotal level. So. And I do believe if intervention does happen, I think the pound yen has got to be the one you kind of look at. But anyway, hey, real quick, guys, we have Empire State manufacturing data coming out. Thanks, Rick, for the reminder. Thank you, Stelios, for not reminding me.
Hey, we still had 10 seconds. Come on.
I mean, come on, man. I mean, I come on.
Sorry, my bad.
Okay, so Empire State
expecting -4.
Oh, that is a negative data, which is bad for the dollar, good for risk, right? when you see data come in worse than expected, you see the euro starting to move here. S&P should be moving a little higher on that news, and it is ticking up just a bit. Right there you can see the 1 minute chart. Remember that we are in a market, perversely, that the stock market loves bad data, and the dollar is going to react, as it should to data. Weaker data, bad for the dollar, stronger data, good for the dollar. But stocks are going to love weaker data because it assumes that the Fed is going to be, adjusting that terminal rate, which happens to be still about around 5%. 5%. Can you believe that?
Yeah.
What do you guys think about that?
I can,
right?
In a year, Blake. Never in our career have we seen velocity like this.
It's wild. So anyway, guys, I want to say just a couple of things. Make sure you get registered for the Trader Summit event. Don't miss it. It starts on Friday. We will be broadcasting Friday, but it starts on Friday. Also, on Friday, speaking of last Friday, Stelios, we authorized 2 payouts for the Trader Funding Program, which is cool. I always love those when people pass the assessment, they're trading live. They start making withdrawals. It's great. We're getting a lot of them. We've been doing this now for several months, and it's cool. So you guys want to learn how to trade our money and keep 75% of the profits and not take any of the risk, then check out the Trader Funding Program. Watch this 2-minute video right at the very top.
And you're giving away a couple assessments at the conference, right?
A couple of $250,000 assessments. These right here. Yeah, we're giving away 2 of these randomly to a couple of registrants. So you guys check it out. Dale, I'm gonna pass it on to you because you have a guest today, right?
Kathy's with us today, and we're hoping that there's fairness in the giveaways at the summit, unlike the U.S. election process.
Well, I forget what software we use for that. Steve would know, but yeah, I mean,
some
randomized
voting machines.
He uses a hat.
Yeah, everybody's got to put their name on a Post-it note and submit it to us.
Anyway, I look forward to winning. Thank you, buddy. And all right, Kathy Donnelly, great to have you back. Sorry you've been having some technical stuff going on. Is it going to work from your iPad?
Well, can you hear me?
I can hear you. Yeah. Okay, we got that.
Okay, well, so far so good.
Okay, so you probably can't do any screen sharing, right? Oh, you can. There you are.
Oh, okay. No, we don't want to see that.
Is that an IPO? It's okay.
Yeah.
We're all of us in the markets, I could show you my, which robe should I wear for the show today?
Yeah.
Anyway,
right.
Yeah. So, Kathy, you've been in a pretty challenging environment for what you do.
Yes, it's definitely been very challenging. And that's what I was kind of going to share with everyone. And I'm going to see if I can share my iPad because I did, as a backup, put my presentation in an email. So if I can get it up, great. Otherwise, I'll just speak to it.
Okay. Okay. So, when we first started talking for quite some time, there was plenty of enthusiasm for markets, and seems like, and now the pendulum's exactly the opposite of what it was a year ago. And I would think, just as a market person, that IPOs in the due diligence phase, which you describe, which happens after the IPO, that if they're holding up now, Kathy, and not getting hammered with the rest of the market, I'd consider that a pretty good sign that there's accumulation going on. Yeah, are there any issues that qualify like that?
Yeah, exactly, Dale. You got it right. That's what
Well,
I'm
I
looking
learned
for.
from you, I mean, I don't just, I listen to the things that my guests say and what their process is, and I remember it. Okay. I get lost in my own neighborhood, but I can remember what everyone's doing and what they do. And I know that was a real important part of your process.
Yeah,
That stayed.
exactly. And tell me, can you see my screen?
Yeah, we've got it up here now. Super
Okay.
growth
Wow.
stock potential. Yeah. So great adjustment. And, uh, that's really a kind of a hallmark of a trader is they don't give up and saying, well, my screen's not working today. Let's do it another time. You fought for this time. So why don't I'll just shut up and you
Yeah.
can go ahead. You could go ahead
Okay.
and
Well,
tell us what you prepared for us.
well, it's all about potential. So you set us up perfectly for our conversation, and so that's why I decided to title this in this way.
Okay.
I mean, obviously, with the data that we've research that we've done, 51% of IPOs are going to achieve at least 100% gain. And, I've shared with you before, I'm even looking for those ones that are 900 and 2000%, which we can find, we can screen for that. We can look for the clues of what to look for. And then of course, understanding the company and how it's, again, changing the way we live, work, and play. So the potential is out there. And with the kind of bear market that we're in, I feel like that even exponentially increases our potential for success when we come out of it. So this is the
I know it's not your bailiwick, but any feeling or any research you've done that would give you any kind of inkling of this would be a pretty short bear market rally, bear market if it ended here. Do you have the patience to just stick with it if it dragged on for another year or so? The bear market? What do
I
you do?
absolutely have the patience, Dale.
Okay. All right.
Yeah, I'm enjoying I mean, it's not time off. I mean, I'm still being vigilant, checking my screens, understanding where, seeing where the market closes every day and every week.
Right.
But there is a little bit of a break, right? Because we're waiting for the setups to happen. And, I would say maybe a couple weeks ago, before we had this new kind of start of a leg down, there was the potential, and I was getting ready of having stocks on my watch list that I would potentially start to put money in if we went the other direction. But now some of those have already been destroyed within this last week. And so now my list is even shorter, but that doesn't mean next week one won't pop up. That'll be like, okay, this is another one that is holding up and now already setting up when that, because every week is just another bar to tell us what's happening in that stock, and are the institutional investors getting ready to potentially put more money into the stock when things turn around.
Okay. Yeah, so you get to separate the wheat from the chaff, and the ones that are still standing are demonstrating something by standing instead of getting knocked over like the others.
Exactly. And what I really wanted to highlight, and we really don't need to look at these charts that I'm showing. I mean, everyone knows we had a huge number of IPOs in 2020, 2021, and now we have
wow,
less than 100.
Well,
and
yeah.
The IPOs are even doing worse, than the S&P 500. This is the Renaissance IPO index compared to the S&P 500.
Right.
And I quickly just wanted to do a screen of the 2022 IPOs. I mean, there's only 59 that trade over $20 million a day. And that's important to note, because when we did the research, we were able to determine that stocks that traded at least $20 million a day or more had the potential to be that super growth stock. And of course, $100 million even better. And right now there is 0 of them, according to my screen, as of the end of day Friday, traded over $100 million a day or more. And six of them trade $20 million a day or more. So excuse me, I said that incorrectly before. There were 59 IPOs in 2022, and only 6 of them trade $20 million a day or more. Because IPOs, as you know, don't want to come out in a bad market. They need the market to help them get to where they need to be. So no one wants to come out right now.
Okay. All right. So
And,
go ahead.
Well, and just let me add before we look at some charts, the liquidity matters, because 28% of the IPOs will trade over $20 million a day. And we don't even have that right now with the 6 out of the 59. But of those, then you've got the 75% of those are going to gain 100% or more. So you've already increased your odds that much more by waiting for the ones that at least trade $20 million a day or more.
Okay, good rule. Because I know everyone out there has been stuck in a low floater where they have to make an appointment to see a trade.
Right.
They took a tip, right? I've done it. Yeah, in fact,
Yeah.
I own a silver one that's like that, OTC, and you really you could set up an appointment like seeing a doctor to see a trade. So don't do that, everyone. Do what we say, not what I do.
Right.
Very important to have liquidity. What if you ever need the money and you need to get out, right? So
Exactly. I haven't had it happen to me, but I've heard the war stories, and that's like the worst feeling when you can't get out into a stock. And so I'm grateful that I haven't had that happen to me. And I've always monitored liquidity. And now the 20 million is my benchmark, but I really prefer $100 million a day or more, which is why I highlighted that in the beginning.
Okay.
So, I mean, a couple of IPOs to watch that seem to be holding up. Let me pull up Market Smith. So this is you see my screen?
Yeah, Snowflake.
Great. So this is the Market Smith iPad version.
Okay.
Yeah, so I can always be checking stocks on my iPad or my iPhone. So great feature here. I'm sure most services
Snowflake's
have that.
been around for a while, right?
Yeah, Snowflake has been around.
It's not
for a
in
while.
the due diligence. What phase is it in?
Oh gosh, Dale, I think this is no, it's definitely still due diligence phase.
Still, huh?
Oops.
After all this time it's been trading. Well, okay.
Well, what happened was, let me show you. Okay, so right here was the first base where I'm having these crosshairs. It made an IPO advance, and then this part was definitely the due diligence phase in here. And then when it got to 405, it never made it past 429, it looks like, which was the turbulence. So it never got out of the due diligence phase. And now it's undercut the whole structure. And so you could call this a continued due diligence phase, as because of an effect from the market.
Okay.
Now it had a run up here from its bottom back in June, and it looked like it was making a nice base here. But of course, it had the 40-week line. That's what this black line is, as resistance. And last week, unfortunately, it's gone lower. So.
But still holding its June lows, unlike many other issues that trade much more, than $100 million a day. So, so, I mean, if you want to look for something positive to say, there aren't a lot of things that did not make new low with the averages in the last few weeks.
Exactly. So even though this weekly bar has kind of messed up the original structure where it was kind of staying tight between 160 and 200 or so, maybe it just gets wider. Maybe it doesn't undercut this previous low in June. I mean, those would be the things to look for. The IPOs that made the low in June and have come up, and as long as they can stay above that low, those could be potentially the ones that continue, or the potential next new leaders.
Okay.
GFS was one I had on my PowerPoint. This one has not been as well. It's only been around since the end of 2021 for one. It had a wide base here at the beginning. Oops. There we go. Didn't get very far, and so it's clearly in its due diligence phase, but not the 40-week line is right in here where that horizontal line is.
Yeah.
So, and also made a low back there, which looks like this was into June, July. So this one's got some good numbers, or at least it has numbers in the sales and earnings situation. So it could be a turnaround. This is semiconductors.
What are you going to wait for to give you a signal for entry on something like this now?
Well, I really like to see consolidation either above or below this 200-day on the weekly chart, this 40-week line. So right now it's clearly in a downtrend, in my opinion, and now I need 3 to 4 weeks of sideways action, or maybe it comes up and makes a sloppy consolidation like it did here. I mean, this is a consolidation, it's sloppy, but one thing I'll share with everyone, and just, we don't always get the pretty cup with handles.
The perfect trade.
Exactly.
You can't find the perfect trade. Oh my gosh, I've been in search of the Holy Grail. That doesn't exist for a long time. There's no such thing as a perfect trade. I mean, is there really?
No, I don't. I mean, you will sometimes. There are. I mean, I've heard Bill O'Neill. I've shared with you. Bill O'Neill has been my mentor for many years. There were a few what he would call the perfect cup with handle. And so I think there are a few out there, in time when we look back, but they are difficult to find. And especially when we have such a volatile market, when I've gone back in time to research what these patterns look like, the cup with handles or the double bottom, they don't always look pretty. And you'd be like, do I really want to buy this? But it still had a consolidation. So even though it was messy, it can still work. And we have to keep that in mind. Consolidation. Well, I was just going to say they can be 50% or more deep, gross. Just they correct so much more than the
what does Global Foundries do?
So they're a semiconductor company. Yeah. So
because they've been the most under pressure, that group, the semis.
Right. And so it's interesting that this one,
not making a new low,
quote unquote.
Interesting. Yeah,
like exactly.
GFS. Okay.
GFS. Yeah. And then the other one I was going to talk about was DR. Well, actually, I want to talk about DV. This one I think is interesting. I have gone to their website just to kind of learn a little bit more about them when their pattern caught my screen. Double verify. And it's almost like they're trying to, double verify, ads, making sure that they're exactly right, and, spammers and all that kind of stuff. I really can't explain it, but it did catch my attention that, their services, companies are seeking them out because they need that double verification when they're putting things out on the internet. And they do have some earnings down at the bottom there. You can see sales, some earnings and some sales. IBD has a composite rating where they rate everything 0 to 99. And so 89 is pretty good, really. And this looks fairly orderly for the most part. It had the IPO case, a little bit of a run up. So we're in that due diligence phase. And this one, unlike the snow that we looked at in GFS, this is building exactly. It's building a base exactly above it. And, it looks fairly orderly. And there's even some tight weeks as Scion, if your viewers can see it. Very, very subtle, but there's some tight weeks in there. And you see the RS line is acting differently compared to the market. So this could be one potentially. It's on my watch list.
Enough volume. I see 8 million a day is their higher volume days.
Well, this is a weekly chart. So let me just pull up the daily really quick. So this is closer to the $20 million. You see this red at the bottom on the volume is
Right.
1.1 million and $27
Right.
price stock. So we're over the 20 million. So this is a little bit lower than the 100, but still above the 20 million. So this one would definitely still make my cut.
Okay. All right.
Yeah.
So there's always something, no matter what,
There's-
with all the bearishness and the bearishness actually is testing a lot of what you watch, and the ones that hold up the best and then start cutting through moving averages have really been through quite a battle to be able to do it. So, shows a lot of resiliency. So if it could hold together, Kathy, is this a premise? If I'm, I'm familiar with Bill O'Neill and relative strength, that if a share or any instrument can hold together when all it has is headwinds, general headwinds in a storm, that when those headwinds either diminish or become hopefully a tailwind, they're going to be your strongest performers.
Exactly. And that's a great analogy. Bill O'Neill also used to say you had to be flexible and you needed to bend with the trees in the wind.
Love it.
And yes. So that
Yeah.
goes right along with what you're saying.
Be a
And
palm
this is why
tree.
we still don't take breaks from the market. We still screen, we still keep our eye out because these things pop up out of nowhere and you have to be there because you don't want to miss it.
Be alert always.
Exactly.
Yeah.
In all things in life, right, Dale?
Yeah. And Kathy, thanks for alerting us to a couple of things to put on our monitor. Best way for people to follow your work. Can you pop up your website and maybe the book that you wrote
Yeah,
to give people?
can.
Go
So people can, there's,
Huh?
sorry, I'm laughing because I pulled up the internet. It shows me trying to, how
It's
do you
so
use
nice
the
to see your
computer?
keyboard on there. Look how fast Kathy types. Can you believe that? I hunt
There
and
you
peck.
go. But
All right. There's her book.
yeah, so this is how you can find me. Yes, there's the book.
Yeah. So you know what, guys?
This is
In
the book,
case.
and
Okay.
these are. Oh, I'm sorry. These
No,
are
go
the
ahead.
my coworkers. You can
Right.
click on us and find our bios and our Twitter handles. For me, it's just KGD_investor, and then you can also find me on LinkedIn. We've got those links on the bottom if you're interested in learning more.
Yeah, and this could be a great time to learn about this while we're in the midst of the bear, because we know one day, unless it ends in Armageddon, that this bear will go away, and whether it's Fed induced or there'll be another cycle to the upside. We don't know from what levels, but prepare yourself for, like Wayne Gretzky. He goes to where the puck is going to be, not where it is right now. So what a great way to prepare yourself and be on board for things you missed in the last bull cycle. So thank you, Kathy, for edifying us. And I really admire your tenacity for hanging in there during what's a very difficult market for what you do.
Thank you, Dale. And let me just add one last little thing. It's going to be very exciting when we come out of this. And then all these new IPOs are going to come out. There's VinFast and there's Stripe and many other new companies. And so we're going to have the ones that will hold up, and then we're going to have the brand new companies. So it's going to be an exciting time. So definitely research and be ready.
Kathy Donnelly, living in the future.
There you go.
That's what Larry Williams says, and he's a market master. He says that we have to live in the future. So we trade in the now, but we live in the future. So thanks so much, Kathy. It's great talking to you again.
Thank you, Dale. Have a good week.
Well, and we'll keep this thing going, and I'll be in touch with you on Twitter.
Thank you.
All right, my trading warrior sister, Kathy Donnelly, everybody. And you could find her at KGD_investor on Twitter. Is that correct, Kathy?
That is correct.
Okay, and go to her website address, which is?
thelifecycletrade.com, and then we'll have copies of this interview and all the interviews that Dale and I have done, as well as other things that you may be of interest.
All right, Kathy. Thank you. Good hunting, my friend.
You too. Thanks, Dale.
All right, that's a wrap, everyone. Thanks for your attention. And you could join the team in 20 minutes on the Morning Edge. Buckle up. We're going to have a wild week, I think. So even though Monday is a little bit tame, I think we're going to have some nice trading opportunities here. And I'll see everyone tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. Thanks again, Kathy. The whole room is thanking you. You're welcome, Laura. Okay, Chandra, Kishore, and Jeff. See you guys.